Aloha, I'm Stan Cox, Principal Broker and Strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the Managing Director of Hawaii Financial Free Thinkers Academy, a nonprofit organization teaching financial literacy education. Today's discussion is, what is the time value of money in motion? Investopedia defines the time value of money, or TVM, as the concept that a sum of money is worth more now than the same sum will be worth at a future date due to its earning potential in the interim. In other words, there's opportunity cost associated with waiting to put your money into a vehicle that earns interest. This is a core principle of finance. Money today, right now, has greater value than the same amount of money to be paid or collected in the future. This is because money can grow only through investing. An investment delayed is an opportunity lost, and the amount of that loss is called opportunity cost. Investors prefer to receive money today rather than the same amount of money in the future because money once invested grows over time. For example, money deposited into a savings account earns interest. Over time, the interest is added to the principal, earning more interest. And that's the power of compounding interest. Einstein referred to compounding interest as the 10th wonder of the world. If it is not earning interest or growing, the money loses value over time. For example, if you hide $1,000 in a mattress for 3 years, you'll lose the additional money it would have earned over that time if you had invested it. That's opportunity cost. It will have less buying power when you retrieve it because inflation has reduced its value. Put another way, let's say you have the option of receiving $10,000 now or $10,000 2 years from now. Even though the amount is the same, $10,000 today has more value and utility than it will 2 years from now because you will have lost the opportunity to earn interest on that money during those 2 years. In other words, payment delayed is an opportunity missed. Now, why is the time value of money important? For example, suppose you can choose between two projects, Project A and Project B. They're identical, except that Project A promises a $1 million cash payout at the end of 1 year, and Project B offers a $1 million cash payout in 5 years. The payouts are not equal. The $1 million payout received after 1 year has a higher present value than the $1 million payout after 5 years. Two main reasons. 5 years of interest that you did not earn on the money during those 5 years. And inflation has eaten more than 2.5% of its value every year. Now, let's apply time value of money to infinite banking tax-free cash growth warehouse. This is, of course, obvious, but if you establish a TFCGW account today and front load it with $10,000, that cash value will begin earning dividend interest right now today. Additionally, the value of that money will also purchase a sum of future wealth for your family's financial security. That will also begin growing now. For the sake of comparison, At the current rate of 6% compounding APR, that $10,000 would grow by over $600 in the next 12 months or 1 year if it were placed in that tax-free cash warehouse account today. Now, let's say the account has a beneficiary amount of $280,000 today. In 12 months, just 1 year from now, that benefit amount would grow by some $35,000 to $320,000. In this case, how much is the time value of this money? $35,600 in just 1 year. In other words, waiting a year to start this account will cost you $35,600 in loss of gains. That's time value of money, my friend. Now, what about the motion part of this principle? How much value does $100,000 have while sitting in a vault? Well, you might say the value is $100,000, but is it? What is that money sitting in the vault? It's just paper and ink representing $100,000 of buying power. So really, what it has is stored or kinetic value of $100,000. But that value isn't realized unless and until it gets put into motion. That is, traded for something of useful value, such as an investment in goods and services. You can't eat the cash, you can't wear it, can't live in it, dress in it, or drive it. It needs to be converted or moved into something of usable value to actually have true value. So when we take that $100,000 and let's say buy a new car and fuel, maybe take a little vacation, enjoy some fine dining with the spouse, now we're getting some real value from that money. We've put it into motion. Unfortunately, by taking our own money and spending it like that, especially as in that particular example, things that are very temporary in nature, meals and vacations, or depreciating in value, such as automobiles, we would then pay a huge amount of opportunity cost. That is, all the gains we could have made by putting that money into an interest-bearing account. And here's the real value of the tax-free cash growth warehouse strategy. By taking advantage of the time value of money and putting that $100,000 into a high compounding dividend interest tax-free cash growth warehouse account, then leveraging the money to put it into motion, we're able to save all that opportunity cost because we're still generating positive interest on the money while we actually use OPM, that is other people's money, that of the account provider, and we're enjoying the real value of the money by means of the new car, the vacation, and the fine dining. And when you put all these pieces together, you'll save money on taxes because the gains from the dividend interest earned on your tax-free cash growth warehouse account will not be taxed, while you use other people's money to enjoy the real value of your money continues to grow and the end benefit you're buying continues to increase for the financial security of your loved ones. Additionally, by regularly practicing this strategy, you will actually recover several times the amount of money you spend. If you are ready to join the ranks of the wealthy, wise money magicians, take action now. Book a free call on my Calendly calendar by clicking the link below here. If you want more information about the strategy, that's fine. Click the link below to request the book download. It's free too. But remember, time is not on your side when it comes to time managed value of money. Take action. Start earning high compounding dividend interest while using OPM, other people's money, to enjoy the real value of your money. Protect the financial future of your family, all while recovering multiple times the money you spend and growing your financial wealth now. And please like this video and subscribe to this channel. Also, post your questions and comments here. Better yet, book that free call with me by clicking the link to my Calendly calendar now. I look forward to talking with you soon. For now, aloha and mahalo for watching.